This logo has an army. This ticker symbol has a navy. This shareholder report has a body count. We're told corporations exist to serve us, to create value, to innovate. But what if the most profitable corporation in history did none of those things? What if, instead, it invented a new form of power, a hybrid monster that was neither a country nor a company, but something far more dangerous? 400 years ago, this symbol didn't just represent a business, it was a sovereign flag. It ruled territories larger than nations. It commanded private armies that humbled empires. It minted its own money and wrote its own laws. It was the Dutch East India Company, the VOC. And it wasn't just trading spices, it was trading in human suffering, engineered famine, and financial weapons of mass destruction. This is the story of the first corporate monopoly, not as a history chapter, but as an origin story for our world, a blueprint written in blood and bookkeeping that is still running the code of modern capitalism today. We think of corporate power as a modern problem: lobbyists, regulatory capture, too big to fail banks. This is a comforting illusion. It suggests the system is broken. The terrifying truth is that the system is working exactly as designed, and the design was finalized in Amsterdam in 1602. The VOC's founders asked a revolutionary, diabolical question: what if we could take the profit motive of a company and fuse it with the absolute power of a state? What if you could declare war for a better dividend? What if you could genocide a population to reduce supply and raise prices? What if you could turn human lives and entire ecosystems into depreciating assets on a balance sheet? They didn't just ask, they built it. Welcome to Economic Historian. We trace the architecture of power, and today we're excavating its foundation. Act 1. The world that built the monster. To understand the VOC, you must first smell the desperation of 17th century Europe. Spices, pepper, nutmeg, cloves were not just luxuries, they were the silicon chips of their day. They preserved food, masked rot, displayed obscene wealth. Control the spice trade, and you controlled the lifeblood of empires. But the path to the Spice Islands, modern Indonesia, was a death race, controlled by the Portuguese and Spanish, plagued by pirates, storms, and mutiny. For a single Dutch merchant, it was a suicide mission. So the merchants of Amsterdam did something unprecedented. They didn't just form a partnership, they engineered a legal and financial superweapon. They lobbied the fledgling Dutch Republic for a charter, but this wasn't a permit, it was a transfer of sovereignty. With a signature, the state granted the VOC the power to wage war, negotiate treaties, build forts and colonies, establish judicial systems and executions, mint its own coinage, and wrote its own laws. It was granted a 21-year monopoly on all Dutch trade east of the Cape of Good Hope. Competition wasn't just illegal, it was an act of war against the company state. This was the birth of the chartered company. It was not a company that had power, it was a corporation that was power. The state had outsourced its most fundamental, violent responsibilities to a for-profit entity. The goal was no longer trade, it was conquest by spreadsheet. Act 2. The 3 laws of corporate sovereignty. Principle 1. The law of chartered power, the sovereign ticker. The VOC's first and most fundamental law was this: its authority flowed not from the market, but from the monopoly violence granted by the state. This changed everything. A normal company competes on price, quality, service. The VOC competed with naval bombardments, slave garrisons, and scorched earth policies. Its metaphor, it was a state in a box, a portable, deployable sovereign entity. Wherever its ships landed, the company's law landed with them. The flag of the Dutch Republic flew, but the profit went to shareholders in Amsterdam. Modern translation: this is the essence of corporate personhood and regulatory capture taken to its logical, violent extreme. The VOC didn't lobby for tax breaks, it was the tax collector. It didn't seek favorable treaties, it wrote them with a gun on the table. Modern parallel, the charter city and corporate sovereignty. Look at modern attempts to create charter cities or special economic zones governed by private corporate law. Look at the legal frameworks of modern mercenary firms like the Wagner Group that blend corporate and military command. These are pale 21st century shadows of the VOC model, attempts to create jurisdictions where corporate profit is the highest law. Principle 2. The law of financial alchemy, the engine of extraction. But the VOC needed a machine to fund its endless wars. Its second law, weaponized finance to create a self-perpetuating engine of conquest. It pioneered financial instruments we take for granted and exposed their dark original purpose. The perpetual debt engine. It issued bonds that never matured, paying interest forever. This created a permanent class of rentiers whose income depended solely on the VOC's continued extraction. The company's survival was now tied to the financial survival of the Dutch elite. The first stock bubble. VOC shares were traded wildly on the Amsterdam Exchange, creating history's first speculative mania. The price detached completely from reality or dividends. This bubble wasn't a bug, it was a feature. It provided a massive interest-free loan of speculative capital to fund more fleets, more forts, creative bookkeeping, and fraud. The VOC mastered the art of the interim dividend, paying dividends not from profit but from borrowed capital. It was a Ponzi scheme wrapped in a sovereign guarantee. It created the illusion of endless profitability to keep the bubble inflated and the capital flowing. Its metaphor, the VOC was a financial black hole. It sucked in capital from across Europe, warped it through its violent monopoly, and emitted dazzling but illusory returns, pulling in even more matter. Modern translation. This is the birth of financialization, the process where making money from money, speculation, debt, complex instruments, becomes more profitable than making things. The VOC's books were a fantasy ledger justifying real-world atrocities. Modern parallel, the modern megacorp and stock buybacks. Look at a modern megacorp engaging in massive stock buybacks. It's often using debt, cheap capital, to inflate its own share price, enriching executives and shareholders in the short term, while often underinvesting in innovation, wages, or resilience. This is the spiritual descendant of the VOC's interim dividend, its financial engineering prioritizing the ticker over the long-term health or morality of the enterprise. Principle 3. The law of externalized brutality, the cost of profit. Here is the grim mathematical core of the VOC model. Its third law, for shareholder value to be maximized, all human, social, and environmental costs must be exported beyond the balance sheet. The VOC's profits depended on a simple, brutal formula: create artificial scarcity. In the Banda Islands, the sole source of nutmeg, the VOC slaughtered or enslaved the entire population to control every tree. Then they limited production to keep European prices astronomically high. Enslaved the supply chain. They didn't just buy spices, they owned the land, forced the labor through local slavery and imported slaves, and controlled the sea lanes. Every link was vertically integrated through violence. Monetize human suffering. Human life was a line item. A slave revolt was a supply chain disruption. A massacred village was a market correction. The incredible wealth landing in Amsterdam was the direct product of a calculated industrial-scale externalization of horror. Its metaphor, the VOC operated a planetary-scale extraction pump. One end was placed in the fertile soils and societies of Asia, sucking value. The other end sprayed dividends onto the shareholders of Amsterdam. The pump's mechanism was unaccountable violence. Modern translation. This is the foundational logic of externalities. The VOC is the ultimate case study. Modern corporations externalize costs too: pollution, low-wage social safety nets, psychological burnout, carbon emissions. The scale and brutality are different, but the structural logic is identical. Profit is privatized, cost is socialized. Modern parallel, fast fashion and resource curses. Look at a fast fashion empire. The true cost of a $5 t-shirt, the polluted rivers, the underpaid workers in collapsing factories, the carbon footprint, is not on its balance sheet. It's borne by a distant population and the global climate. This is the VOC's model sanitized and sped up. Or look at a modern resource extraction company in a weak state. It often creates enclave economies of wealth for elites while leaving local populations with environmental devastation and conflict, a direct echo of the VOC's factory fort model. Act 3. The synthesis. The VOC's legacy in our code. So let's compile the code of this first corporate sovereign.